as well. Rahul Jain is now with us. IRCTC has, of course, been one of the buzzing names of late, done, I think, about 5x, 6x since the time it has listed. Rahul, what's your perspective? What do you think is the trigger that is taking to this re-rating?
Yeah, I think the way we have to look at this kind of an upside is how market participants are thinking about any internet companies where you would see even a lot of loss-making companies now getting IPO'd, and where potentially the market is valuing not the 1 year, 2 year typical earning forward that we tends to do, but what kind of profit these companies can make over a period of time. So I think if we try and apply the same logic we would apply for name like Zomato and try and discount the earnings of FY27 or FY28 to today's time, then possibly some of this kind of a valuation can be justified. And the way a lot of things have opened up for this company over a period of time, we all know that how big is the railway as an end industry big potential, and IRCTC is slowly venturing into many non-core activities or railways, which is expanding the total canvas and addressable opportunity for the business. So, which is actually getting baked into the valuation at this point.
And that's the thing, right, Rahul? Because in its bullet train avatar that it's currently in just the 2 years of its listed, history, it's already gone up about almost 20 times since the IPO. Just wanted to understand, for those who've completely missed the train, and no pun intended here, can they still jump on, or do you think now the valuations don't merit an entry at these levels?
Yeah, of course, any run-up which is as sharp as what we have seen in case of IRCTC is definitely a difficult price point to recommend anybody to onboard at these level, given the sharp run-up. But are we trying to be a 1 year trader or 2 year investor or a 10-year investor? From that perspective, we would not be shying away to stay positive on this name. The reason, the topmost reason is that if you look at this business, there is a lot of untapped pricing, which will play out over a period of time. Just look at this way. At the time of IPO, there was no convenience fee charge. There was a absent period because of the demon, which they skipped earning those things. And when it came back, we have seen how the profit pool of the company has increased significantly. Now, just give you without getting into too many nitty-gritties, if I just share about the ticketing business. Now, in case of IRCTC, ticketing is charged on a per PNR basis rather than per passenger basis. And if you look at the convenience fee which they charge, even for an AC commuter, it's just 30 rupees, while the average ticket value is more than 1,000 rupees. So the convenience fee being so low, and also that it is charged per PNR or per ticket rather than per passenger, it itself gives three leverage. One, the price of 30 rupees can go to 40, 50, 60. It used to be 40 rupees 4 years back, so definitely that can go higher over a period of time. Secondly, per ticket, there is 1.7 passenger. So even if they move this from per passenger, from per ticket to per passenger basis, their profit pool can jump by 70%. So those are the kind of very big untapped pricing potential available in the business. So what we are envisaging, let's say 800 crore profit for this year, we don't know when some of this pricing come into play. The total profit pool can go to 2,000 crore, 3,000 crore in just matter of couple of years whenever this pricing action are taken. So nobody can time it, but yes, these things will happen because the same consumer are paying very high convenience fee or take rates are charged by various internet businesses to the same consumer, which are in the range of 5 to 10%, even 15% in some case. So that way, there's a long way to go for IRCTC in terms of long-term potential.
Rahul, great to have you on the show and get in that quick perspective on IRCTC.